What's up, guys? Welcome to the Cashcraft, your daily dose of finance and technology news and updates. Bitpanda just went from being a crypto broker you've never heard of to supplying infrastructure for banks in 45 countries. And they're doing it by betting against the thing that made them successful in the first place. Here's why this matters. While every other crypto company is chasing retail users and fighting for the same pool of traders, this Vienna-based firm is quietly building the rails that let traditional banks offer crypto without actually becoming crypto companies. It's a bet that the next phase of crypto adoption doesn't look like more Coinbase accounts. It looks like your existing bank app with a Bitcoin button that just appeared one day. Bitpanda launched in 2014 as a retail crypto broker, the kind of platform where Europeans could buy Bitcoin without jumping through the flaming hoops that early crypto required. For years, that's all it was. A solid, regulated, unremarkable way to buy digital assets in Austria, Germany, and a handful of neighboring markets. But around 2020, something shifted. The company started building a second business that had nothing to do with competing for retail customers. They created what's called white label infrastructure, basically the back-end technology that lets other companies offer crypto services under their own brand. A bank in Brazil wants to let customers buy Bitcoin? Bitpanda provides the custody, the compliance, the trading engine, the regulatory framework. The bank slaps its logo on top and calls it a day. Now here's where it gets interesting. While Bitpanda's retail business is still confined to Europe, they serve users in just a handful of countries. Their B2B infrastructure business operates in 45 countries. That's not an accident. That's a deliberate strategy to separate the high-regulation, slow-growth retail side from the scalable, fast-moving enterprise side. The company isn't disclosing exact revenue splits, but they've made it clear the future growth is in B2B. They're supplying crypto infrastructure to over 200 banks and fintechs globally. And they're not stopping at basic trading. Bitpanda is going all in on tokenization, the process of turning real-world assets like stocks, bonds, or real estate into blockchain-based tokens that can be traded 24/7. Why does tokenization matter? Because it solves a problem traditional finance has struggled with for decades: fractional ownership and instant settlement. You want to own $50 of a Picasso painting or trade a share of commercial real estate at 2 a.m. on a Sunday? Tokenization makes that possible. And Bitpanda is building the infrastructure that lets banks offer these products without hiring a single blockchain engineer. There's another layer here. Bitpanda is preparing for an IPO. They haven't announced a date, but the company has been public about its intentions. And here's the thing nobody's talking about. Going public as a pure retail crypto broker in 2026 is a tough sell. The market's seen that story. Coinbase went public in 2021 and has spent years proving that crypto trading revenue is wildly volatile, up 300% one quarter, down 60% the next. But going public as a B2B infrastructure provider with sticky enterprise contracts and recurring revenue from banks, that's a different pitch entirely. That's predictable cash flow. That's the kind of business model that makes institutional investors actually pay attention. What most people miss is that Bitpanda isn't abandoning retail. They're just being honest about where the leverage is. Retail crypto is a solved problem. There are dozens of apps where you can buy Bitcoin in under a minute. The unsolved problem is how traditional financial institutions adopt crypto without rebuilding their entire tech stack or navigating regulatory minefields alone. Bitpanda looked at the landscape and realized something crucial. They don't need to be the biggest retail platform. They need to be the infrastructure layer that makes 200 other platforms possible. It's the difference between owning a popular restaurant and owning the company that supplies kitchens to 200 restaurants. The question you should be asking yourself is whether the next wave of crypto adoption comes from new crypto-native platforms or from your existing bank quietly adding crypto features you didn't even know were possible. Because if it's the latter, companies like Bitpanda just became a lot more important than their low profile suggests. Personally, I'm watching whether traditional banks actually follow through. We've seen a decade of blockchain pilots that went nowhere. But if tokenization of real-world assets actually takes off, and the regulatory environment in Europe suggests it might, then Bitpanda's bet on being the infrastructure provider instead of the front-facing brand starts looking prescient. That's all for today, folks. If you found this helpful, make sure to like and subscribe to the Cashcraft for more finance and tech news. Drop a comment below with your thoughts, and I will see you in the next one.